If you're still stuck believing last month's headlines, that's old news. Data is quickly changing, and good buyers and sellers will miss out if they don't keep current on the housing market. In this video, we'll show you where we haven't seen this many buyers since 2021, the surprising median home price differences between houses and condos, plus there's a county with an upside-down market. It's time for the Southern California Housing Market Report. And away we go. Buckle up. A lot of data to cover for Southern California housing market, starting with single-family data. So there's single-family homes, condos, and townhomes all rolled up into one. Starting in Orange County, and the first thing we're going to point out is the black line is the mortgage interest rates. Crazy record low mortgage interest rates in 2020, 2021. Makes you wish you would have bought everything. Then Russia invades Ukraine and mortgage interest rates go up, and they've been up since then. Over 7% in 2023. We are down from that high, but we are up year over year. So higher mortgage interest rates in 2025 than 2024. So the red line, that is new listings. So that's seller supply. The white line is the number of properties going under contract, buyers writing offers. That's buyer demand. And then the yellow line, that is number of sold properties. So we can see during those crazy low mortgage interest rates times, we had a lot of properties going under contract and we had a lot of new listings. And then we get into 2022 when we had higher interest rates and we see all those things drop. But what you need to notice is that the number of new listings, that's down year over year. So last year, at this point in time, we had more people putting their properties on the market. We started to see that this year. It started to be swinging into a buyer's market, and then things have changed since then. The number of pending sales, those are up. So we can see buyers writing offers going under contract. That's up. And it's higher than all the way back to 2022. And we're getting closer to 2018 for the number of properties under contract. And that was a normal year, if there's such a thing. Definitely not a COVID year. So that's what we have for Orange County. We see a drop in new listings year over year. And we see an increase in the number of properties going under contract. Moving into Los Angeles, and we have the same trend for the number of properties that have gone under contract. So buyer demand is up. We have more people under contract in 2025 than we did going all the way back to 2022, but not like pre-COVID, but on the way back up. New listings, we are down slightly year over year, not as low as it was during 2022 and 2023. Riverside, seeing more folks do the old drive until you can qualify because mortgage interest rates have been high and prices have continued to go up. So people are starting to do what they did before, which is drive to where they can qualify for a home or find the home that's going to work for them. Same trend, 2025, more pending sales than we've had all the way since 2022. And we can see new listings, similar trend to LA, where they're down slightly year over year. San Bernardino, the county of yes, is saying yes, we have more pending sales. Inventory's down. The gap between the pending sales and new listings, that's tight. So that means that there's less choice for buyers out there. Look at those numbers back in 2018. Not there yet. Maybe we will be soon. Ventura, you're always doing your own thing. You are the only one who's down year over year for number of pending sales and higher than 2023, but not higher than 2022. You're always doing your own thing, Ventura. Fewest number of homes in the county of all the Southern California counties we cover. San Diego, same trend. More pending sales. Inventory is relatively tight as well. If you go back to 2018 for number of new listings, we're at about half of new listings. That's a crazy drop. And pending sales only off by about a quarter. So that there was much more choice back then in 2018, that big gap between new listings and pending sales, than buyers out there shopping right now have. Multifamily numbers, everything 2 units and larger, one of the only places you're going to get these numbers. And again, mortgage interest rates, same pattern, same mortgage interest rates for single family and multifamily. What makes it tougher in multifamily is properties that have 5 units or larger, makes it tougher for them to cash flow. Need a larger down payment in order to cover the debt service coverage ratio. So that's what we're seeing, and that's why we've been seeing cap rates go higher when people are selling, which means a lower value. If you're paying 6.5% or 7% for mortgage interest rate, it doesn't make sense to buy something that's a 2 or 3% return. You need to get a higher return to justify. OC multifamily, we can see a big drop in the number of new listings and a big increase in the number of pending sales, almost all the way back to 2021. So there's a lot of buyer demand out there, maybe a bunch of people doing 1031 exchanges, and higher than pre-COVID levels, higher than 2018. So a lot of demand in Orange County. Will we see that in some of the other counties? LA, it's up. We also have more demand in LA, even being a tougher market for landlords because of the rent stabilization ordinance that caps how much a landlord can increase rent. And there's a lot of properties with very low rent. So interesting to see the increase in number of pending sales, and we're also seeing an increase in the number of properties for sale. Riverside tends to be a more affordable market, better returns for investors, and you can see that here. We had a drop in 2024, very low number of properties going under contract, but it's since rallied back and is almost near pre-COVID levels. And you can see, again, with the number of new listings versus pending sales, less choice out there in Riverside than we had back in 2018. There were more listings for sale at that time. San Bernardino, big spike in new listings last year. It's since come down, and we can see that our demand is up as well, higher than it's been since 2022. Not like pre-COVID years, but getting there. Ventura, not enough properties trading, but we can see that there is an increase year over year. It ties 2023, definitely better than 2022 when we had one go under contract in September. San Diego, another hot market, but we're down. The only market to see a drop year over year in the number of pending sales, drop in the number of properties for sale. Not as low as 2022 in new listings, but we can see there's slightly more demand in 2025 than we had in 2022. But again, unique in SoCal because we have that drop for the number of properties going under contract year over year, whereas in Orange County, we had a big increase year over year. So interesting to see maybe investors moving their money from San Diego to Orange County. Entirely possible. Buying or selling in SoCal, you need a pro who's in the know. Click that link below. Median home price madness. Starting with single family homes because the numbers are very different when we pull out the condos and townhomes. And we are first looking at OC, LA, Riverside. Let's see what happened month over month. Any increases, decreases? We would expect decreases. 'Tis the season where we start to see the median home price go down through the end of the year and then turn around and go back the other way as we get into the next spring buying, selling season, and OC is actually up month over month for single family homes. Then we have LA pretty flat and Riverside pretty flat. So not seeing big drops in the month over month value. How about year over year? OC 0.7% year over year. LA, 4.6% year over year for single family homes. That's a big increase, and 1% in Riverside for median home price year over year. So all positive numbers. It isn't all positive when we get into condos and townhomes. First things first, how are we looking month over month? Well, OC's up slightly month over month, down in LA, and big down in Riverside County. That's a very different trend than we saw in the single family home numbers. When we look at condos and townhomes on their own, how about year over year? Here's where things get interesting. All negative numbers. OC down 1.4%. So even though it's up month over month, year over year down. LA down 1.4%, same as OC. Riverside down 6.7% year over year. That is a big drop in value, especially when you factor in inflation. So there is a big difference in the market right now between condos and single family homes. Let's see what's happening in the rest of the SoCal counties. And this is a big difference too. So we can see San Diego, big drop in the month over month. Ventura, big drop month over month for houses. San Bernardino for houses month over month is flat. Year over year, oh boy, San Bernardino up 4.8%. Ventura down 3.2% year over year. San Diego down 3.6% year over year. So we're already seeing negative numbers when it comes to houses in these counties. let's take a look at the condos and townhomes to see where those end up. And these jagged lines mean that there's just fewer of these sales, so the numbers can be manipulated up and down much more quickly when there's fewer of them. So San Diego's up month over month, down Ventura County month over month, down in San Bernardino month over month for median home price for condos and townhomes. How about year over year? San Bernardino, it's up 3.5% year over year. Ventura down 0.4%. San Diego up 3.6%. These numbers vary dramatically all throughout Southern California, whether we're talking condos and townhomes or single family homes. That's why you need to actually look at your local area to see how those values are doing. And one of the best tools to look at your local area are the Altos Research reports. You can dive down to city and zip code. Right now we're looking at national numbers, and I want to take a look at inventory. We can see that at the national level that inventory is up and it is staying up. So that is going to be a dramatic difference from what we see when we look at the county level in Southern California. Make sure you look at new versus absorbed. Sign up for these reports so that you can take a closer look. What we were looking for is to see if the new inventory is starting to stick and stack up because it's greater than absorbed, and that's not the case. There are times when we've seen that in these reports. The other big thing is days on market. Now, what's typical is the bottom of the market tends to move faster than the top. That's what we're seeing here at the national level. It is going to get interesting when we look at the other numbers, and it's also interesting to see the different quartiles. This is broken down into 25% of the market ordered by price, and that's the median within these 25% quartiles, those numbers there. So you can see that when you look at these national numbers compared to our local numbers, we tend to have much bigger numbers for median home prices. Zooming into the statewide level, so now looking at California data, we can see that inventory has turned, but then it bumped back up. So there's a slight increase in inventory, and definitely higher than where it's been in the past few years that this chart covers. And then we look at new versus absorbed. Again, all the new listing numbers lower than absorbed numbers, and that is rare that we see it flipped, but we have seen it flip, particularly when it's becoming more of a buyer's market, which we were starting to see a couple months ago. And then days on market, here's an example where the lowest quartile is actually taking longer to sell than the middle of the market. That's an interesting trend to see, and we're going to see a few other counties that the same thing happens. Zooming in more, started national, went to California, now we're in Orange County, and we can see that inventory has turned, and we're seeing a drop in inventory. It peaked and is going the other way now. Looking at the new versus absorbed, more absorbed than new. Days on market following the typical trend, 42 at the bottom all the way up to 119. Again, look at those median quartile numbers, and you can see that actually the lowest quartile in Orange County is about the same as the highest quartile at a national level for the median home price. Another interesting thing, talking about days on market, in Orange County, when it was moving faster, we saw these numbers get way down for the bottom quartile. We saw 14 days on market, 7 days on market, and 42 is not a terribly long time, but it is when you compare it to the crazy days that we've had during the low interest rate days. Los Angeles inventory dropping, went up a little bit, dropped again. New versus absorbed, definitely lower. If you remember in the last report we did, we saw that in many cases the new numbers were half of the absorbed numbers. We're not seeing that extreme level this time around. And same trend where we can see bottom of the market moving faster than the top of the market. Riverside inventory turned, dropped, and went back up a little bit, but looks like it's going to be trending down through the rest of the year. Another interesting one where the bottom of the market is taking a little longer than the next phase of the market. The bottom and the third quartile taking about the same amount of time. San Bernardino inventory turned, and this one is unique from days on market standpoint. The bottom of the market taking the longest to sell. It's an upside down market in San Bernardino. Middle moving faster, highest moving almost as fast as the bottom, but it's upside down. Ventura inventory has turned. Days on market, look at that, 35 days. Actually, bottom of the market in Ventura moving faster than it was in Orange County. And new versus absorbed, again, not double, but we're seeing that the absorption rate is higher than the new inventory coming to the market. So San Diego, we can see inventory's turned, been a little choppy, but heading the other way. New versus absorbed, almost double on some of these numbers. Top of the market, we have double the absorption versus the new. So that's what we were seeing when the market was heating back up. And pretty normal here where the bottom takes longer than the top to sell. There are your Altos Research reports. Make sure you subscribe. You can subscribe for your local area or any of these reports by clicking the link below. I want to know what you're seeing out there. Let me know in the comments below. Sign up for a free weekly email newsletter so you don't miss a single update. And just when you think you have the housing market figured out, you need to see this next video right here.